Hey there, future trading titans and financial strategists. Welcome back to the channel where we demystify the complex world of market dynamics, specifically focusing on those intriguing hard-to-borrow stocks and the potential for short squeezes. Today, we're diving deep into a specific name that's been lighting up our screeners, CIIT International Inc., ticker symbol CIIT. But first, a critical word. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Alright, let's talk about CIIT. CIIT International Inc. operates in the industrial sector, specifically within integrated freight and logistics. Through its subsidiary, Rushing International Company Limited, CIIT provides logistics services across a broad international footprint including Hong Kong, Vietnam, Japan, Zimbabwe, and South Korea, focusing on ocean freight forwarding and container shipping. This is a microcap company, currently sitting with a market capitalization of just $3.06 million. Show company logo/sector info. What is cost to borrow and why it matters? So, why are we looking at CIIT today? It's all about something called the cost to borrow, or CTB. When you short a stock, you're borrowing shares from a broker to sell them, hoping to buy them back later at a low price. But borrowing isn't free. You pay a fee, typically expressed as an annualized percentage. The higher this fee, the more expensive it is to hold a short position. When a stock becomes hard to borrow, it means there are very few shares available, driving that borrowing cost sky high. Why this stock is hard to borrow right now, and high it is for CIIT. Our screener shows an astronomical cost to borrow fee of 896.4% annualized. Highlight CTB percentage. That is an incredible rate for short sellers to pay just to maintain their position. CIIT International's estimated float, the total shares available for public trading, is a relatively small 7.3 million shares. This combination of small float and a massive borrowing fee has given CIIT a composite squeeze score on our internal scale of 53.4 out of 100, putting it squarely on our watch list. We currently don't have data on shares available to borrow, but this CTB figure strongly suggests supply is constrained. Squeeze mechanics explained. Now, let's connect the dots to a short squeeze. Imagine short sellers are paying nearly 900% per year just to bet against CIIT International. If the stock price starts to rise, two things happen: short sellers face unrealized losses, and their borrowing costs continue to eat away at any potential profit. If the price moves aggressively higher, or if borrowable shares completely dry up, short sellers might be forced to buy back shares to close their positions. This buying pressure, often frantic and compounding, can ignite a squeeze, a rapid price surge fueled by short covering, pushing the stock much higher, very quickly. Remember, a high CTB doesn't guarantee a squeeze. It can also mean short sellers have strong conviction and are willing to pay the price. Dilution risk check. One critical factor to consider for any potential squeeze candidate is dilution. Dilution occurs when a company issues new shares, which increases the total share count and can depress the stock price. Even with high cost to borrow, new share offerings can effectively negate a squeeze thesis. For CIIT, we've checked recent SEC filings and found no dilutive S-1, S-3, or 424B filings in the last 90 days, which is a positive sign for short squeeze potential. Recent reverse split watch. Another important recent development for CIIT International is its reverse stock split. Just 16 days ago, on July 20, 2026, CIIT executed a 1-for-10 reverse split. A reverse split reduces the number of outstanding shares and, in theory, increases the share price proportionally. It also, by definition, reduces the float. Historically, many microcap stocks tend to see renewed volatility or even a price pop within approximately a month after a reverse split, as the market digests the new share structure and reset price. While this is a common pattern observed in some names, it is by no means a guarantee for CIIT. Show reverse split details on screen. Before we talk about what to watch for, let's reiterate our important disclaimer. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, what does the recent price action and volume tell us about CIIT? Today, the stock is down -1.27%, which is a modest pullback. However, looking at the broader picture, CIIT International has surged an impressive plus 7.89% over the last 5 days, and an astounding plus 437.90% over the last 30 days. Share price chart with 30 DAY gain. This shows significant bullish momentum leading up to today. Volume-wise, today's trading saw 22,183 shares exchanged. This is incredibly low compared to its 30-day average volume of 1,375,176 shares, giving it a relative volume of 0x average. Extremely low volume on a down day after a massive run could indicate either a lack of selling pressure or simply a temporary lull in interest. Keep a close eye on any sudden spikes in volume, especially on upward price movements. CIIT International, Inc., or CIIT, presents a fascinating case with its extremely high cost to borrow, small float, recent reverse split, and impressive short-term price appreciation. Understanding these dynamics is key to recognizing potential short squeeze setups. Remember, this is about education, not recommendation. Always conduct your own thorough due diligence. If you found this analysis of CIIT insightful, please hit that like button, subscribe for more deep dives into hard-to-borrow stocks, and let us know in the comments what stocks you'd like us to analyze next. Until then, stay safe and trade smart.